people want Bitcoin. They don't want the US dollar, no longer world reserve currency. So I don't want US Treasury bonds. I want Bitcoin. So it's demonetizing the bond market. That's a $200 trillion honeypot that's going to move from bonds to Bitcoin. So that's 100x from 2 million, right now, 2 trillion. Right, to 200 trillion, that's 100x. So the price is 120,000 times 100. And that's a fair estimate of where we're going just on the demonetization of bonds, not even considering the demonetization of gold and property. So why are you trying to time the market? Why people say, where's my price target? My price target is everything that's not Bitcoin is worthless. Everything goes to zero against Bitcoin. That's my price target.
Yeah.
Anything that you have that's not Bitcoin goes to zero. That's my price target. Whatever you know, the only money you'll ever have in your life is Bitcoin. Nothing else will serve as money ever.
Despite Donald Trump's crypto advisor announcing his departure from the administration, there remains a wave of bullish energy from investors this past week. But Max Keiser is sounding the alarm. He warns that the sell-off we're witnessing is just the opening act. The Bitcoin tsunami he sees on the horizon could reshape the entire crypto landscape. Keiser goes further, predicting the unavoidable collapse of the fiat money system as we know it, and revealing a plan already in motion to seize control of Bitcoin and the broader crypto market. With BlackRock emerging as one of the most influential forces stepping into the space, Keiser warns this may soon be the least of our worries, as entire nations have their sights set on Bitcoin. Right now, Bitcoin is sitting just under $119,000, up just 1% in the past month. In his latest interview, Keiser explains why the moment for nation-states to adopt Bitcoin and weave it into the global economy is now, before the inevitable breakdown of the current monetary system. Let's dive straight into Keiser's latest insights, as he lays out his bold prediction for Bitcoin in the months ahead, and why an unprecedented flood of capital may be about to pour into the market. Drop your comments down below and subscribe if you enjoy the content we do here.
Don't try to time the market, spend time in the market. Let Bitcoin work for you, and the only way you can do that is by hodling. And the best and safest way to do it would be to dollar cost average in, where you're doing a standard set dollar amount, and you do it every week or every month. You buy, let's say, $1,000 every week. And no matter what the price, if the price is higher, you end up buying less. If the price is lower, you end up buying more, and your average price over time is you don't suffer the volatility. It eliminates the volatility that stresses people out. And then you have Larry Fink works for you. Once you have Bitcoin, Larry Fink works for you. Schwab company works for you. Michael Saylor works for you. Michael Saylor is my employee. Larry Fink is my employee. In a different world where inflation was lower and wages were higher, and you could get a savings rate or a savings bond, if you recall such a thing. They were called savings bonds. You could save money, and there was a culture around savings. And then savings became vilified. And like, for example, Paul Krugman used to talk about the savings glut, right? Like, don't save money. You need to spend money. The path to virtue is through debt. But you can't have capitalism without capital.
Exactly.
And you can't have capital without savings. And you can't have savings without an interest rate that encourages people to save. Because that's where the capital base comes to grow an economy, not through debt. And so that lesson was completely lost during the neoliberal phase of our modern economic Keynesian bedeviled world. And Bitcoin restores the savings rate. So you have, let's say, what we call it the Keiser rate, or the average annual appreciation of Bitcoin, which I think currently is somewhere north of 20%. So that's the new savings rate, or what people call now the hurdle rate. And so you can save in Bitcoin. And so this is reigniting in people what the idea of savings, what that's all about. You're saving because you believe in a brighter future. That's why you have saving. And it gets back to the primary purpose of, or the function, or the definition of money itself. So what is money? Going back 30,000 years, money is a shared aesthetic that we have as humans. And the idea that beauty is in the eye of the beholder is actually false. We all have very similar ideas of beauty. We have a very similar aesthetic as humans. So then throughout history, we've searched for the more perfect form of money. We got to gold. Gold was the best money out there for thousands of years. And then Bitcoin came around and usurped gold as the ultimate perfect money. And that's why Bitcoin is demonetizing gold. People are selling their gold to buy Bitcoin, in part because people no longer want to be in that business. They're buying Bitcoin. It's demonetizing the fine art market. It's demonetizing the bond market, which is the biggest honeypot, like $200 trillion. You see, the bond market is continuing to run into problems, particularly in the U.S. The U.S. is finding it very, very, very difficult to sell U.S. Treasury bonds to anybody except themselves. They don't want U.S. Treasury bonds anymore. It was a primary money for so many years, but that bond apocalypse and that moment of reconciliation, that moment of truth about what Bitcoin means is rapidly approaching. And if you don't have Bitcoin, you're going to be a no-coiner. And if you're a no-coiner, you are going to be extinct, gone.
Fueled by an unshakable passion for the crypto world, Keiser boldly predicts that the next market collapse is already taking shape, a storm that even BlackRock and other major crypto powerhouses are preparing for. Yet Keiser offers reassurance. The long-anticipated surge is still on the way, with Bitcoin's price set to climb exponentially in the second half of 2025.
I think that at some point, as I said a little while ago, when you enter the Bitcoin singularity and your Bitcoin become my Bitcoin and my Bitcoin become your Bitcoin, the whole idea of money disappears completely. And we have a massive upgrade as humans and the evolutionary step change to a post-egocentric existence as animals on planet Earth. And we become more spiritual, where money is doesn't really mean much. We're just basically vibing in each other's consciousness, thanks to Satoshis that are being exchanged freely without any filters. That's the Bitcoin singularity. That's also kind of rapidly approaching. Every Bitcoin you have, you are helping facilitate the collapse of the fiat money world. So that we have to collapse the fiat money world. That's why when the corporate treasury companies are kind of reunifying money with state, and to me, they're like, it's great that there's a huge demand for Bitcoin, but they're also kind of keeping alive the organism, to a degree. And so there's kind of delaying the process. So, but inevitably it will go down the path anyway. They're just putting in a minor speed bump toward that. But of course, in the juvenile minds of the average coiner, they took this as, there's like 3 million of them or more that have been created. They all follow the same price pattern. They spike, crash. And I think that in this cycle, the Bitcoin dominance is now rising again. And the shitcoin market will go to zero against Bitcoin because everything does. And there's competition now in the Bitcoin treasury companies, like GameStop, was an interesting story because they figured out that the hedge funds were short more GameStop stock than existed, using naked short sales, which is something I've talked about before. So there was more stock sold short than existed in the float, because you're able to attack a stock price down to zero, and then you never have to cover your short. And so it's all profit. And that's a game that the Wall Street Bets people figured out. And they went on their Reddit chat board and got millions of people aware of this. And they started buying GameStop, which created a short squeeze, and they made money on that. They focused on GameStop because, for a lot of different reasons, and they ignored Bitcoin. That's true. And now GameStop, of course, they ended up with a lot of cash, and they're putting some of that cash into Bitcoin. And they haven't yet put a lot of cash in Bitcoin, but they're kind of sniffing around. So that will bring in a lot of those people that would ordinarily sell and be involved in coins, on the chat boards and on the periphery, and the degens as we call them. They have now something that's traded at Schwab. It's easy to do, and that's where the focus of attention will be. It won't be on these unregistered, unlisted, hard to find meme coins. That's just too cumbersome to do so. They can just do GameStop, or now there's a lot of these other penny stocks or penny price types of treasury companies, and they're popping up all over the place. So that's really where that speculative degen market is headed. So they're going to walk probably away from what we call the coin market. So I think the days of the coin market are over, because there's other options now that these folks who trade in that market will find easier and more to their liking. Whereas a player like Strategy, I don't believe that they would ever sell their Bitcoin, and any price pullback they would use as a buying opportunity, even if the Bitcoin were trading at a discount to their stock price. They wouldn't sell stock to buy back Bitcoin, if I got that correct. I may have gotten that backwards.
They wouldn't sell Bitcoin to buy back stock, is what you're saying.
So whereas a company like over there at Bitcoin Magazine, they have Nakamoto, and they've already stated they would. So they're not thinking about Bitcoin, they're thinking about their stock. So on a pullback, you're going to have a lot of these companies sell their Bitcoin and buy back their stock. So that will create a pretty significant pullback in Bitcoin price. If I gave you both the price target, because the next question you're going to ask is when, what date, okay? If I gave you both price and date, like I can, to protect myself, all I can say is it's going higher.
The Bank of Japan, long a key player in global currency dynamics, is now on the edge of default, a move that could trigger a worldwide economic downturn. Max Keiser warns of an approaching economic catastrophe fueled by collapsing fiat systems, runaway inflation, and widespread bank failures. He sees a possible shift toward a Bitcoin standard as the world scrambles to navigate the looming crisis. With no real solutions in sight, Keiser warns the severity of the crisis is far greater than most realize. Yet he notes an intriguing shift. Political leaders are now openly discussing Bitcoin as part of the answer, signaling a potential move toward a Bitcoin-centered financial system. All the classic signs are flashing: global liquidity turning higher, Bitcoin dominance stalling, and Ethereum sitting in prime position to lead the next wave. If history's any guide, we know what happens when the M2 money supply starts climbing. Capital races down the risk curve. The first stop is Bitcoin, and before long, the entire altcoin market starts lighting up. The stage where prices don't just rise, they launch. Think parabolic moves, broken records, and price targets that used to sound impossible, suddenly looking conservative. We're standing on the edge of a once-in-a-generation window, one where crypto isn't just an investment, it's the single most powerful hedge against the relentless squeeze of currency debasement. The next chapters of this cycle aren't going to be quiet. The question isn't if the bull run will heat up, it's how fast you'll be ready to move when it does. What's your take on Keiser's latest interview? And how do you see his prediction shaping Bitcoin's future? Drop your comments down below and subscribe if you enjoy the content we do here.